Ladies and gentlemen, the AI bubble has officially just popped, with artificial intelligence stocks getting absolutely destroyed here in after hours. As you guys know, artificial intelligence is the sole reason why the markets are so high as they are right now. This is potentially a problem for hedge funds, institutions in their short positions, because AMC stock needs high quality collateral, and AI stocks such as Nvidia, such as big tech, have really been the ones that are deemed as riskless enough for AMC short position collateral. So we're going to get into this situation, what's happening here in after hours, as well as everything else you need to know about a potential collateral crisis that is starting. Ladies and gentlemen, hit that like button and subscribe to the channel. Source your comments, questions, or concerns down below in the comment section. So, number one, AI stocks getting absolutely crushed here today and in after hours. CRM, number one, down about 5% here in after hours after beating on sales, on revenue, on basically everything, even raising guidance. But they did not give you that blowout quarter, that raise to guidance like Nvidia did. So the stock is falling. This has been one of the leaders in the AI hopium. CrowdStrike, down about 11.5% here in after hours. Same thing. People were hoping for more AI initiatives. Now the actual stock AI, ticker symbols AI, C3 AI, down 9% in regular trading and down 17.5% in after hours. Nvidia dropped almost 6% today. The AI bubble is officially popped. Now, how deflated does it get? Well, that's hard to say. But as of right now, these stocks are falling like a rock. So why is this important for AMC for short positions? Well, notice the same time that these stocks are falling, AMC stock has actually been rising. About midway through the day, AMC started to rise as sell-offs in stocks like Nvidia started to get more aggressive. And it is because of that collateral situation. So when hedge funds want to take on a short position in AMC, they have to pledge collateral. They have to pledge high quality collateral. And small and mid cap stocks, that's not high quality. Apparently, according to our market standards in 2023, those stocks have gotten absolutely crushed already. They've already crashed. A lender is not going to be willing to take those kind of names. But your AI stocks, such as a Nvidia, a Microsoft, an Apple, a Google, an Amazon, sure, those qualify. So they pledge those stocks as collateral. And then depending on what the value fluctuation is of that collateral, those stocks that I just mentioned, you have to either place more collateral or less depending on what happens with those names, with that collateral. And they've only went higher as of recently. The markets have been pretty parabolic, pretty ridiculously parabolic. So there really hasn't been a lot of pressure on hedge funds and institutions. There's just the pressure is no pressure. But what you're seeing right now is the pressure is being put on these hedge funds and institutions. Looks like the AI bubble, while it was fun while it lasted, is over. Now, there could be something else, sure. Doesn't look that likely, though. But when one story ends, another starts. And this time around might just be a whole market crash. That's a very real possibility. And what that could do for AMC stock is really squeeze shorts out of their short positions, because AI is a big part of this market. It's not everything. And you're looking pretty vulnerable right now here in the markets. After all, the Chinese stock market just entered into a bear market. If you look at the NASDAQ, we're far from a bear market. Quite the opposite. So we have a little bit of catching up to do, I would say. Now, with AMC stock, a lot of this name revolves around catalyst, new information, things that happen. And I can't sit here and I won't sit here and forecast that I know the next thing that's going to happen. I don't know what the courts are going to say about AMC. I don't know how GME earnings are going to be next week. I just don't know those things. But from where I currently sit, from my perspective here with AMC, it looks like a worthy risk. Looks like a good risk to reward. Granted, after the stock has been selling off precipitously almost day after day. Like, it's been pretty ridiculous. Now, when AMC stock, not if, but when AMC stock does catch a bounce, millions of shares will need to be bought back by the market makers in an indiscriminate way. And we've talked about this before a couple times here on this channel. But basically, it's not like hedge funds or institutional investors, when they short a stock, they can kind of ride the wave up or down. When these hedge funds and institutions are buying these deep in the money puts, and the market makers are making a market, they have to go out and short AMC stock if the hedge fund puts start to make money, essentially. And that makes the market makers have a huge short position on AMC like they currently have. Now, if AMC stock starts to rally, market makers, they have to go out and buy the stock back. That's just how it works. So the same way you'll get a gamma squeeze to the upside, you've actively been seeing a reverse gamma squeeze. And now that you are getting this AI bubble that has now officially popped, I think there's going to be more pressure on AMC shorts than we have seen in a very long time. And while you might need the next catalyst to push AMC stock up by a big degree to actually get the market makers that, you know, needing to buy back millions of shares, you're a lot closer now than you were yesterday, in my personal opinion. I think the overall collateral situation is a little bit worse today. And a lot worse, actually. So there is that. Now, as far as catalysts that I can definitively say will have an impact on this market, if we look, coming out tomorrow, ISM Manufacturing PMI, expecting that at 47.1, or expecting that at 48. Last month's reading was 47.1. So you're expecting, you know, things to get a little bit better for manufacturing over the last month. Fed Harker that speaks again at 1 p.m. tomorrow, and that is it. Friday is the big day, 8:30 in the morning. The unemployment rate for May, you're expecting that at 3.5%. The current rate is 3.4%, so an uptick in unemployment. Non-farm payrolls, you're expecting that at 180,000. The last month's reading was 253,000, and you're going to get the other payroll data points as well that come out after that data coming out at 8:30 in the morning. So you are going to get some big economic data throughout the rest of this week, and that could definitely move the markets. With AMC stock, it's really going to be the court date and GME earnings that have an big effect on AMC. That could really move the stock 20-30% in a day. And from there, when that move does come, I expect a gamma squeeze to continue at that point. At least in my personal opinion. Now, if we look at the Ortex data for AMC stock, live short interest of free float at 21.53%, 111.18 million shares that are currently sold short. Cost to borrow average 67.15%. Cost to borrow max 99.69%. Cost to borrow minimum 50.13%. Interactive brokers short availability 250,000 shares that are currently available. Cost to borrow fee, 65.15%. So even increasing as far as Interactive Brokers. The option activity here today, you have seen 7 orders totaling $1.65 million. You guessed it, positive order value of 0%. And look at the options, guys. Right here where my cursor is, down here left side. $10 put, $10 put, $10 put, $10 put, $10 put, $5 put, $10 put. Like, when they are purchasing these deep in the money puts, it's forcing market makers to short millions of shares. Just based off of what we're seeing today. I mean, absolutely insane. That's 50,000 shares they had to short. Another 45,000, another 50,000, another 23,000, another 50,000, another 70,000, another 50,000. All in all, over 500,000 shares that had to be shorted just today alone. So it's really no big shocker why AMC stock keeps falling the way that it is. When you're only seeing 13.2 million shares trading hands today, you're getting a big effect from those options. And today is actually a weaker day for some of those in the money puts that we've seen in the past. Usually you do get more option activity on AMC stock. They're taking a little bit of a break today, and AMC stock is down 2.81%. We're also waiting for updates on the debt ceiling. They're going to be voting on this in the House very shortly. I believe in the next hour and a half or 2 hours from now. And that's going to be really the next big thing. I don't expect it to give you a positive reaction in the markets because markets have already firmly priced in the debt ceiling getting raised. This is not new information, that this was going to get raised. It was always going to get raised. We were never going to default. And part of the move you've seen today, the down move in the markets, was kind of sell the news kind of event when people bought the rumor on the debt ceiling crisis. So we'll see how all of that does play itself out. If we take a look at the probability for a Fed rate hike coming in June, now you're looking at a 69.1% chance of a pause. That's interesting. Earlier today, you were about 68% chance for a hike. Now it's pricing in a pause. Markets don't know what is going on right now. Wow, that's actually insane. They just don't have a clue. I guess we'll see. Take a look at the option activity on Stonko Tracker. For this week, you got 7,000 calls currently in the money, 71,000 calls out the money, 23,000 puts in the money, and 25,000 puts that are out of the money. But the big option expiration upcoming is going to be June 16th. You got about 6,400 calls in the money, 422,000 calls that are out the money. In the money puts 339,000. Out the money puts 488,000. So massive option activity for June 16th as well as for July 21st. And really any time now, we should be getting a definitive update from the courts. And alongside that, with GME earnings, those are going to be the next big catalyst for AMC stock. As far as technicals here, you're at a kind of middle ground, right? You're definitely not at the highs. You're not quite at the lows that we were at just back here in April at $3.88 per share. You're at $4.51 per share. You did see, like I showed earlier, a retracement from the low at $4.38 per share. That's a good sign. If that can continue into a green day tomorrow, get a reverse of trend, that's going to be really good. Right now, the RSI is at 32.81. 30 is technically oversold. You're approaching that oversold level. MACD also in bearish territory. All in all, the downside aggressiveness of this move should be met with an equal reaction to the upside when the next catalyst comes, when AMC stock decides to get bullish, or when hedge funds decide that some of these deep in the money puts to suppress AMC stock is no longer worth it. And notice again, you are red in regular trading and you are green in after hours, because what does not trade? Options in after hours. So that is going to do it here in this video. Risk to reward wise, it makes a lot of sense. It looks attractive at these current levels. Let me know what you guys think about this down below in the comment section, and about the AI bubble that has just officially popped. Nonetheless, thank you guys for watching, and I will see you in the next one.